All right. Hey, everyone, and welcome back. You know us. We love to get into the nitty-gritty, and today it's Cola Wars. But hold on. Put down the taste test cups. We're not actually drinking anything.
Right, we're looking at Coca-Cola and PepsiCo, but through an investor's lens.
Exactly. And there's no better lens than, well, the Oracle of Omaha himself, Warren Buffett. He's famously in love with Coke, the stock, that is. So we dug up this awesome article comparing the two companies.
Yeah, should be interesting.
By the end of this deep dive, you'll know what each company's strengths are, if Buffett would still buy Coke today at its current price, and, most importantly, which one might have the strongest returns.
Gotta love that potential profit, right?
Absolutely. And speaking of Buffett, his investment in Coke really highlights his whole philosophy. It's like a textbook example.
Oh yeah, the moat strategy.
Exactly, a moat. Durable competitive advantage, that's the key phrase. Like, think brand loyalty or having a global reach. These things make it way harder for competitors to make a dent, and that's Coke to a T.
I mean, everyone knows Coke, right? Exactly, and Buffett saw that early. He started buying shares way back in 1988.
Wow, 88. Must have been a steal then.
Well, probably. But the point is, today, that stake is worth about $25 billion, with a B. And get this, it's making him $776 million per year, just in dividends alone.
Okay, hold on. Let me just let that sink in for everyone.
Yeah.
$776 million every year, just for owning the stock. That's mind-blowing.
It is pretty incredible, but it also raises a big question.
The question on everyone's minds, I bet, would he still buy Coke at today's prices?
Well, you know, Buffett is all about value. He loves a good bargain, and Coke, right now, it might be a bit pricey for his taste to be buying new shares.
So even billionaires like a sale, huh?
Apparently so. Okay, but let's get into the actual numbers here. We got to compare Coke and Pepsi head to head.
Hail of the tape, what do we got?
First up, market capitalization. Coke sitting pretty around $265 billion. PepsiCo, bit smaller, $217 billion. But, and this is important, bigger doesn't always mean better for investors.
Right, there's more to it than just size, for sure.
Absolutely. So let's look at enterprise value. Coke, $297 billion. Pepsi, $255 billion. And then there's the one everyone loves, the price-to-earnings ratio. Or as the cool kids say, PE ratio.
Love a good ratio. Okay, break it down for us. What does the PE ratio actually tell an investor? Like, why should they care?
The PE ratio is like a quick way to see how much you're paying for every dollar of a company's earnings. So with Coke, that PE is sitting at 26.
Okay, 26 for Coke. And Pepsi?
Pepsi's a bit lower at 23.
Lower. Does that mean Pepsi is the better deal then?
Well, a lower PE can sometimes mean a stock is undervalued, but gotta be careful. It's not the only thing you should look at.
Fair enough. Lots of pieces to this puzzle. So we've got size, we've got value, we've got that PE ratio. What about everyone's favorite, dividends?
Dividends. Always a hot topic. Right now, Pepsi's actually beating Coke on dividend yield, 3.42% versus Coke's 3.14%.
So for every dollar you invest, Pepsi's giving a bigger chunk back right now. Interesting.
Yeah, it could be a real draw for folks who are focused on that steady income from their investments.
Okay, so even though Pepsi's holding its own on these key numbers. But how do we really get a feel for their future potential?
Right, we got to go beyond just these basic figures. It's about understanding their strengths, what they're good at, and of course, where the risks might be hiding.
Makes sense.
Yeah.
Can't just blindly trust numbers. Got to look at the bigger picture.
One big thing that jumps out is that Coke, they're all about beverages. PepsiCo, on the other hand, they've branched out.
You mean like their snack empire?
Exactly. Frito-Lay, all those chips and snacks, that's PepsiCo. And that diversification could be a huge advantage in today's market.
Why is that?
Consumer tastes are changing all the time. Think about it. Health trends, new preferences, who knows what's next. PepsiCo, with their snacks, they've got more ways to adapt.
Right, like they're not putting all their eggs in the soda basket.
Exactly. So even if soda sales take a hit, they've got that cushion from the snack side. It's like a built-in safety net.
Clever. So Coke might be the king of soda, but Pepsi's playing a different game entirely. Lots to think about there.
Definitely. It's not a simple answer, which is what makes this whole thing so interesting for investors. We'll dig into more of that in a bit. And you know what's interesting? This whole diversification thing ties back into Buffett, believe it or not.
Oh, how so?
Well, he's not just about finding a good deal today. He's also thinking about the future, where the world's going. That's a big part of his strategy.
Yeah, makes sense. You want your investments to keep growing, not fade away as the world changes.
Right. And PepsiCo's snack game, it plays right into some massive trends that are only getting bigger.
Like what? Give us some examples.
Well, for one, people are busier than ever. On-the-go snacks, convenience, that's huge. And then there's the whole shift towards healthier eating. Some folks are ditching soda, but they're still snacking.
So PepsiCo's got a foot in both worlds, so to speak.
You got it. They're not just betting on soda staying king forever. That gives them a real edge, especially if you're thinking long-term.
Kind of like Buffett, right? He's in it for the long haul.
Exactly. But hold on. Don't count Coke out just yet. They're still a global giant. And let's be real, their brand is iconic.
True. There's something about that classic Coke logo, right?
Oh, yeah, that's power. Plus, they've got this incredible distribution network. They're practically everywhere. And they're not standing still either. They're getting into new drinks, too, like coffee and tea, even trying out some alcoholic drinks in certain markets.
But they're not just sticking to the old playbook, trying some new things, huh?
They got to keep up, and that's what makes this whole comparison so fascinating. Both companies have strengths, both have weaknesses. It's not a clear winner situation.
That's like, which flavor of ice cream do you prefer? Both delicious, just depends on your taste.
Exactly. And that's what makes investing so interesting. It's not just numbers, it's about you, the investor. What are your goals? How much risk are you comfortable with?
It's personal, in a way. You got to find what fits you.
Right. Like someone who wants that steadier income. Maybe they're drawn to Pepsi's bigger dividend yield. But if you're all about growth potential, maybe you see more in PepsiCo's wider range of products.
And of course, there's the folks who just love Coke, the brand, the history. That counts for something too, right?
Absolutely. There's no right or wrong answer. It's about what aligns with your investment style, what makes sense for you.
And this is where I think things get really cool. We got to talk about tools like Stock Finance Pro. We mentioned it earlier, but this is where it gets really powerful.
Oh, yeah. This app is a game changer. It takes things to a whole new level beyond those basic numbers we talked about.
So what's so special about Stock Finance Pro?
Well, think of it like this. We talked about fair value, right?
Right, making sure you're not overpaying for a stock, even if it's a big name like Coke or Pepsi.
Exactly. Stock Finance Pro helps you calculate that fair value. It gives you a more objective way to judge if the current price is actually a good deal or not.
Because sometimes, let's be honest, the hype gets to us, right? We see a popular company and just want in.
Happens all the time. But Stock Finance Pro helps you stay grounded, look past the hype, and focus on what the company is really worth.
Okay, so you get a clearer picture, less emotional, more data-driven. I like that. But what makes it so different from other tools?
The cool thing is you can adjust different factors in the app. Like say you think Coke's going to grow faster than expected. You can plug that in, see how it changes things. Or maybe you're more cautious, think growth will be slower. You can test that too.
So it's not just a one-size-fits-all answer. You can personalize it to your own view.
Exactly. You can match it to your own investment thesis, see how different scenarios play out. It's like having a personal financial model right there in your hands. Pretty powerful stuff.
It is. We've talked a lot about numbers and trends and all that.
Yeah.
But investing, it's not just about spreadsheets and algorithms.
Yeah. Totally. We've got to remember the human side of it. We're talking about companies that make products people use every single day. They're part of our lives. They bring back memories, emotions.
That's an interesting point. It's not just about profit. It's about how these companies connect with us on a deeper level.
And that connection, that loyalty, that's part of what makes a company valuable in the long run. That's something Warren Buffett gets, for sure. He invests in companies he believes in, companies that he thinks will still be around and still be loved years from now.
So even if he's not buying more Coke today because of the price, it doesn't mean he doesn't still believe in the power of that brand.
Right. It's all about taking the long view. And for investors, it means we can't just look at the numbers. We got to think about those intangible things too. The brand, the story, the connection with people, it all plays a role.
Lots to consider, that's for sure. So where does this leave us? We've got Coke, the classic, maybe a bit pricey right now, but still a powerhouse. And then there's Pepsi, branching out, playing the long game. Could be a good bet for the future.
It's a tough choice. It really is. And it brings us right back to that big question. Would Buffett buy more Coke today? Knowing what we know about him, how he loves a bargain, well, Coke's current price might not be tempting enough.
But, and this is important, even if he's not adding to his pile right this second, it doesn't change the fact that he's already got billions riding on Coke. That tells you something, right?
Oh, absolutely. It shows that he believes deep down in the long-term strength of that company, that brand. That's a key takeaway for any investor, no matter what stock you're looking at. It's about looking beyond the hype, beyond the daily ups and downs, and focusing on those core fundamentals.
Right. It's not about trying to time the market perfectly. It's about finding those companies you believe in, the ones that are built to last.
Exactly. And that's what we hope you take away from this deep dive. Whether you're thinking about Coke, Pepsi, or any other company, it's about doing your homework, understanding the business, and then making a choice that aligns with your own goals, your own risk tolerance.
And speaking of making smart choices,
Yeah.
we've got to give a shout out to Stock Finance Pro one last time.
Oh, yeah, I can't forget that. This app, it can really change the way you invest.
I mean, we talked about it, but it bears repeating. Stock Finance Pro helps you calculate that all-important fair value. You can see, based on different factors, if a stock is actually a good deal at its current price or not.
That's right. And it lets you play with different scenarios, adjust growth rates, all that. So you're not just taking someone else's word for it, you're coming to your own conclusions.
It puts you in the driver's seat, makes you a more informed investor. And honestly, isn't that what it's all about? Taking control of your financial future, making decisions that are right for you, not just following the crowd.
Couldn't have said it better myself. Think about it. 5 years from now, you look back at your portfolio. Don't you want to be able to say, hey, I made those choices based on my own research, my own understanding? That's a good feeling.
Absolutely. So whether you end up on Team Coke, Team Pepsi, or Team something else entirely, the important thing is to do your research, use the tools available to you, and invest with confidence.
And most importantly, enjoy the journey. Investing shouldn't be a chore. It should be exciting. It should be about participating in the markets, in the world.
Well said. Thanks for joining us on this deep dive, everyone. We hope you learned a thing or two, and hey, maybe even had a little fun along the way. Until next time, happy investing.